Hey everybody, Walrus here from Walrus Street, bringing you an update on Citius Pharmaceuticals today. Citius Pharmaceuticals is a company that I did a DD video on back in February. Most of the information in the video is still accurate, just throw out the dates, but if you want to check out that video, I would strongly suggest doing so. I outlined what was appealing about Citius Pharmaceuticals and gave a lot of information about their products from a medical standpoint, the necessity of them. I thought it was a really good video. I really enjoyed it. I think it was actually the best performing video on my channel ever. But a lot of people have been asking me about my current opinions on Citius Pharmaceuticals, where I'm standing. So I wanted to take a look at the big news recently, and I wanted to go through talking about how I felt about the company, if my opinions changed. So this is going to be a short one, but let's get into it. So back on July 1st, Citius Pharmaceuticals announced positive recommendation by the Independent Data Monitoring Committee, the DMC, to continue the Menaloc phase 3 trial as planned. Now this happened end of June, early July, and if you look, there was a big price run up in Citius Pharmaceuticals right up until that date, and then when this announcement was made, the price just dropped off. And the run up was because people were expecting the DMC to approve an early end to the phase 3 trial. But the reality is that the phase 3 trials for the DMC are only approved for early termination less than 3% of the time. So statistically, it was very unlikely for that to happen. If I was a better trader, I would have understood that at the time, and I would have actually closed out of my position and reopened it after the drop. But hey, you know what? We all have moves that we don't make, and looking back on them, hindsight is 20/20. You know, I think in the future, if I'm in this situation, I am going to make a mental note that DMC is very unlikely to go through. But the news itself was very positive because they didn't have any edits. There was nothing that needed to be changed in the trial, in the data, in the format, in the subject recruitment. Everything was good according to the DMC, and they just told Citius to keep going with the plan. This is good. The DMC interim safety and efficacy review of Menaloc phase 3 trial concluded with favorable recommendation to continue the trial as planned with the protocol-defined sample size and power to achieve the primary endpoint. The DMC did not identify any safety concerns, and no modification was recommended to the protocol-defined sample size or power to achieve the primary endpoint. Just a reminder, in case you don't know, if approved, Menaloc would be the first and only FDA-approved treatment that salvages central venous catheters that would cause central line-related bloodstream infections. I'm not going to go into the whole thing, but right now, with a central venous catheter, if there is an infection in the catheter, the protocol at the hospitals is to remove the catheter and replace it. And this is very dangerous and can lead to secondary infections, can lead to physical damage or trauma, and there's a lot of problems about it. So the in-CVC treatment using Menaloc uses the antibiotic solution to flush out the infection in the CVC, and it reduces morbidity, mortality rates of patients with central venous catheter infections like Cribsies and Clabsies. You're up to date, you're good to go. That's all you need to know for right now. Now, a couple days later, on the 7th, Citius Pharmaceuticals gave their first half business update. Now, they talked about the DMC, saying everything's good. Then they mentioned that the Menaloc new drug application submission is planned for 2022, following anticipated completion of phase 3 trial by the end of 2021 or early 2022. Now, these dates are a little weird, and you're going to notice that Citius keeps pushing the goalposts off. So now we've got an NDA planned for 2022, and I guarantee you this is going to be late 2022, mid to late 2022 for the NDA, the new drug application. Once it's actually submitted, it's probably going to be fast track, but even then it's going to take 6 to 9 months. So yeah, that's not happening anytime soon, which means the major catalyst here is going to be positive phase 3 results leading into the NDA submission. So if you're looking at closing your Citius position, you're going to want to do so on the PR about the positive phase 3 results, assuming they're positive. And maybe that's a big assumption, but everything looks good so far. Now, we're looking at the end of 2021 or possibly early 2022 for the phase 3 trial to wrap. And this is a little bit different because at the end of June, we were talking about the end of 2021, but then on this July 7th report, they added in early 2022. Now, I don't know if this is like a safe harbor addition or if the company's already starting to kind of push the goalposts off a little bit further. We can't really know because they haven't released any PR about that. But this is worth noting, if you're buying options on this, it's possible that we don't get the positive phase 3 data until sometime in early 2022. So if you're looking at those February calls, could be a little tight. We don't know. This was negative to a lot of people. Subsequent to March 31st, 2021, Citius issued 11.2 million shares of their common stock upon the exercise of warrants for aggregate proceeds of 16.9 mil. This is normal for a pre-revenue pharma company. They sell shares to make money. Also worth noting, most of these shares that they sold went to institutions, which are typically buy and hold. They're not going to be traded by retail. Now, the most recent update is just from 2 weeks ago, August 12th, 2021, their third quarter financial results. Again, pre-revenue pharma company. There's nothing in here. They're just talking about how much cash they have and giving updates on their products. So right now they're sitting on 115.7 million in cash and cash equivalents as of June 30th to develop their pipeline and invest in long-term growth. They're not short on money. They talk about their stem cell acute respiratory distress drug moving forward. They talk about FDA guidance for their patient-reported outcome tool for Halo-Lido, which is their hemorrhoid drug. They mention Mino-Lock, of course, and it says they remain focused on further developing their engineered stem cell program, which holds the potential to offer a novel and scalable therapy for all causes of ARDS, acute respiratory distress syndrome. And this is a little bit interesting because of COVID. Now, back in February, when I first made the CTXR video, I kind of wrote off this whole ARDS treatment therapy that they were dealing with stem cells because it was something that was going to be so far off that I didn't think that it actually had any merit. But now, 6 months later, we're seeing how persistent COVID is, and we're seeing stuff like the Delta variant. And I'm starting to wonder if possibly we're going to be dealing with COVID for years into the future, and this stem cell treatment from Citius Pharmaceuticals might actually develop into something that could be useful with COVID in the future. I don't know, but knowing what I know now after 6 months, I think there's a higher likelihood of that happening. On June 21st, 2021, stockholders approved an amendment to the company's articles of incorporation to increase the authorized number of shares from 210 million to 410 million, and the authorized number of common shares from 200 million to 400 million. As of June 30, 2021, the company had 145 and change million common shares issued and outstanding. We currently have 145, well, rounded up to 146. We were at 200 approved, upped this to 400. Now, this is a little bit worrisome. We moved that window from about 54 million remaining common shares that the company could issue to 254 million common shares that the company could potentially issue. Now, this isn't a guarantee of sale of shares, but this opens the door for the company to possibly sell an additional 254 million shares without requiring a shareholder vote going into the future. This really only plays a factor if the phase 3 results for Mino-Lock are terrible. If that happens, then the company is going to need this huge buffer of shares to sell to stay afloat. But also if that happens, then I think most of us are just SOL and we're going to be losing our money anyway. The company expects that research and development expenses will increase in fiscal 2021, and we continue to focus on our phase 3 trial for Mino-Lock, progress of the Halo-Lido product, and continue our research and development efforts related to ARDS and Mino-Wrap. So right here, they're saying they're going to be spending more money on R&D going into the future. Again, this might put a little bit of a stress on the finances. Now, there are some positives though. This is just on FinViz. If you go to insider transactions, there really haven't been any insider transactions, additions, or losses, but institutional transactions, institutions have been upping their percents, 82.71, and according to FinViz, this is just in the last 3 months, so this is just since May. This includes institutions that added to their position after the DMCA gave that positive ruling. Institutions, yes, and if you look at the institutional owners, there's 96 with 93 longs, 1 short only, and then 2 long-short hedges. Institutions are right now holding about 25 million out of the 146 million shares, so about 17.5%. And if we go through, these purchases from institutions are coming in consistently. 824, 823, 19, 17, 16, 15, all the way through, and there's way more greens than reds, which means new positions or added positions coming through here on Fintel. I could scroll through. We're only in July. This is going back to the date of the DMC announcement from this red point upward, and you can see the majority of them are green. So in the interest of transparency, my position for Citius Pharmaceuticals right now, I'm sitting on 2,000 shares. My cost basis, my average cost per share is $1.39 a share, which means I'm sitting at about a 40% gain based on the current share price. So how am I feeling? Am I so bullish that I'm literally incrementally buying more? Am I more bullish than before? Am I unchanged? Am I more bearish than before? Or am I so bearish that I'm selling shares? I think, honestly, this one is actually going to be between the top two. I am more bullish than before because of the fact that COVID is sticking around. And I think as far as the company's future goes, the acute respiratory distress syndrome drug with stem cells that they're working on actually might have more of a use in the future. The fact that they're progressing with Halo-Lido is good. The fact they're progressing with MinoRap is good. The fact that the DMC said everything looks good from a statistical standpoint, from a structural standpoint, I think everything is good to go. I think I maybe misjudged the likelihood of the DMC giving early termination of the phase 3 when I did my last video, and that was my mistake for not knowing that the DMC only gives that early termination about 3% of the time. But I learned my lesson, and I think I do want to add to my position if Citius does drop off even more. If I get close to my cost basis, or if God forbid the price somehow drops below my cost basis, I'll definitely be adding more to my position because I am confident in Minolock's approval. Now, what would happen to cause the share price to drop down? If we have a share issuance and a sale, because now we know the company can sell an additional 254 million shares. So if there's a share sale, then the share price is going to drop, and I might add to my position a little bit more to kind of hold my position size. If there's a broader stock market drop off, then Citius is going to be a victim. We've seen the Russell 2000 falling off in value, but Citius has been holding more or less pretty strong. It hasn't fallen off along with the rest of the Russell 2000. It's dropped a little bit, so it's holding strong, which makes me feel like there's not going to be a whole lot of negative price action, even in a bit of a crash. So we might see some lower values with Citius, but I don't think it's going to be significantly lower, and I'm still feeling really bullish about the chances. If we take a look at the chart for Citius, really, since that announcement for the DMC, we dropped down right away to around $2 a share, and right now we're sitting at about $2 a share. So we've had a net loss of 10 cents, and this is even despite all of the craziness in the Russell 2000 and in the small cap indices. We're at a net loss of 10 cents even through all of that. So I don't really see this price moving. The volume is low, people aren't reacting, people are just holding, and the analysts right now are projecting between $4 and $8, which is effectively what it was before, a little less because of the share sale. So there you have it. That's my opinion on Citius. Still feeling pretty bullish. I'm not really changing anything in my investment strategy. Thank you guys for watching the video. If you did enjoy the video and want to support the channel, check out my Webull referral link below the video. If you sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins. Also, if you enjoyed the video today, please be sure to like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. Stay safe. Good luck investing, and I'll see you next time.